The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Monday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN 9:06 a.m. as we start the trading week. 24 minutes until the opening bell, and we got markets all in the red right now. Barely in the red, though. Pretty marginal action overnight. You have a little bit of a lift off from where we were at about 3 or 4 in the morning. S&P's down to about 43.20. We're now trading at 43.37, negative by just about 6 points. You look where we were in terms of Friday action, actually made it to a high of 43.65 in the 3 o'clock hour Friday before pulling back a bit into the close of trading. NASDAQ 100, pretty similar action right now. We're negative by about 0.3%, trading down 42 points at 14,719. You get the Dow negative by just 2 points right now, 34,165. We jumped to Bitcoin. Bitcoin, quite a week last week. Friday, you really accelerated to about 48,700. Right now, we're right near that area, down $250 at 48,140. Crude. Check out that pop in the crude contract, folks. $77.04. 8 a.m. this morning, we were just trading at 75.75. Crude continues to trade higher. You put crude on a daily, and that's right. You're talking about recent highs, folks. Got above the high that we had on July 6th. That high was 76.98. We're basically trading right at that price point right now. But you see it. We got a new high on this chart of 77.26 in that crude contract. Back to the short-term charts. Gold contract pulling back a bit. We're up to 17.66 overnight. You're at 17.52 right now. Silver's down 11 pennies at 22.42. Notes and bonds. We start the week off with lower price and higher yield. Quite the volatility recently in bonds. You take a look at the daily, you really had the acceleration down to about 131.08. Since then, we've bounced a bit. This morning, you're talking about a yield right near 1.5% still. You're talking about 1.493. 1.493 to be exact on that 10-year. And you look where we are, skipping around the same area that we were in. This is a weekly chart I have now. You're talking about from March to the better part of June. You were skipping around at about 1.5%. We're right back in that area, 130, 131. And the Fibonacci numbers I have up here, you got to actually go back, I believe it is 5 years to see the full context. From the lower price, higher yield areas we had back in the end of 2018, you trade to higher price, lower yield at the spike high of COVID. That was correlating to yields of what were they approaching? 0.5% yields. Since then, we've pulled back to the 382 of the full run there. What happens if we go higher from here, folks? You're talking about remarkable action when you think about it. I think we have some higher yields coming at us, which would point to lower prices in the 10-year in the future. But nonetheless, you get some volatility persisting. We jump over to the VIX. The volatility index right now, that's a weekly I have up. Since we have it up, we'll zoom in on the action. We'll start it off with about a year ago in terms of October, a high of 41.16. That was coming into, if you remember, the election, 2020. We also got efficacy for the vaccines. That sends the market soaring higher. That sucks the VIX volatility out of this market. We were at 41 and change. That's the last time we've seen 40 in the VIX. But we saw a series of lower highs. And then the last couple of weeks, though, we had a high of 28.79. 28.79 a couple weeks ago. And last week we got up to 21.15. This week we're kicking things off at 22.22. We're at a new elevated level in terms of where we are. All right, what else we got going on? Let's jump around to some of the action. We'll kick it off with a summation of what we have going on. We got yields rising a bit. We got the commodities in terms of the supply crunch, buoying commodities, we'll say. You have the S&P marginally lower as we kick things off. And we're talking about oil here in a big way. Saudi Arabia is making more money from oil than at any time since 2018, folks. Look at that in terms of billions of dollars that they're pulling in right now. That's monthly revenue from oil exports. You look at where they are, you're pushing big time numbers. Best part we've seen since 2018. The energy crisis continuing to worsen in Europe with power and gas prices surging before the onset of winter. The power contract for November in Germany traded above 200 euros per megawatt hour, a record. Natural gas futures also extended a rally. We'll take that opportunity to jump over to our natural gas contract. And the run continues here. That's a weekly in natural gas. And where do we start? Right there. I mean, weekly, you're talking about, you go back to April, you were at $2.50. We're pushing $6. We'll take that Fibonacci number off there just so we can see. And, man, it's quite a run, folks. We just started this week, and already we're off to the races. We closed out last week in natural gas at $5.54. We're trading at $5.90. You had a spike high of $6.31. The run continues, and, man, you want to talk about it, might as well put crude on that weekly as well since we're looking at it. Crude. You fall out of bed to actually negative prices at one point back last April of 2020, consolidate for a bit from June until November, and man, that market just takes off, folks. We were trading at November at $33.64. We had quite a little pullback. Now, taking a look at crude, putting the Fibonacci retracement on here, almost made it back down to the 382. We would have been at about $60, made it to 61 and change. Maybe that's the next leg of an ABC. We'll see, but we just climbed above that high of 76.98. Yeah, because we didn't get there last week. We just eclipsed that high. If that's going to be an A to B to C to D, I mean, that would be from 33 to 77. You're talking about a $43 A to B leg. That would push you at about $100 and change, maybe 105, as you'd be rising from a C point of, no, excuse me. Yeah, exactly. $43, you'd have a low of about 61. You'd be rising to about 104 would be the projection if you accelerate past this B point in crude. All right, what else we got going on? Jumping around to some of the equities. Why not? We'll kick things off with stocks. Tesla. They delivered 241,300 vehicles during the third quarter, the most ever for a quarter, and a 73% increase over the same quarter a year ago. Interesting, too, in terms of Amazon. They just always are pushing out headlines. CNBC, everything is breaking news now. But pretty interesting as you have Blue Origin. They're going to be launching William Shatner. Why not? Why not? On October, tourist space flight. Shatner going into space. Makes sense. Why not? Back to Tesla, though. Tesla inflicts more pain on short sellers. Okay, we're going to pull up Tesla first. There's your action on Tesla from 775. We're trading at 796 right now. You're up about $20. You're popping about 3% this morning. Now, that's talking about the full context of this. And here's where China's plant comes into things in terms of what they're talking about here. The Shanghai factory was critical to the electric car leader making it through the initial pandemic. Growing Asia, Tesla set vehicle delivery records in 5 consecutive quarters. That's the number that they just came out. I mean, look at that rise as we continue. Model 3 and the Y in the black there, the S and the X in the blue. You can see that the Model 3 and the Y, everything to this company right now. They opened that China factory just before COVID-19. Almost a year and a half later, they had a little bit of a battle with California, of course, if you recall. But nonetheless, those numbers persist in a big way. 241,300 vehicles exceeding estimates and sending shares up about 3%. Tesla continues with strength. You put it on a daily, Tesla, and we're pushing right at about $800. Last week, we traded to $799. You got above that area this morning. We're back above it at $796. You back up to the area in April. That was only a high of $780. So we're going to be above that area. And above 800, you're basically in the 800 to 900 range. And you see, we chopped around there for basically the better part of January into the middle of February early this year. All right, folks, stay tuned. We're coming back, see what else we have on tap. We got non-farm payrolls coming up on Friday this week as well. We'll be right back.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500-plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. I got a chart of GM up here. GM pulled back from $64. We're down to $53.13 as the close of Friday. You pull up the 15-minute. We have some action this morning, up about $2 there to $55. Pulling up GM. How about $50 billion in revenue? GM-backed Cruise sees robo-taxi business growing. Folks, the future is going to be wild. It's going to be back to the future in terms of robo-taxis, flying robo-taxis. It's not a matter of if, it's a matter of when. And when you process on your brain that it's probably a lot quicker than we can imagine because of the exponential growth going on in this technology sector, it's pretty remarkable that we're going to have self-driving cars and flights and all that stuff, drones delivering our products, etc. And when you, the flip side of that is, it has to be infallible. And there's been articles written that, you know, it can't quite be infallible. Many people die on the roads every year, unfortunately, in regular accidents. There probably will be some level of acceptable failure in terms of once robots take over, which is amazing to even say. But that last little bit of technology, it's almost like the last mile in delivery. That's always the big problem of process in terms of getting over that last mile. They can get everything to the shipping hub, but it's that last little mile and how much it costs. The last little bit of making sure that they're safe enough to be, whether it's 95, 96, 97, 98, 99.99% safe. You can't envision every type of obstacle cars are going to run into. They're still just computers. If they haven't seen anything before, it presents a problem. But it's coming, and it's coming right now, folks. We're only a few months away. We just kicked off October trading on Friday. It's October 4th. We get non-farm payrolls on Friday for the month of September. That's probably going to keep the volatility elevated in this market as expectations. We're now coming into September numbers, right? The extra unemployment benefits dropped off at the beginning of September. That should take a month or two. In theory, that's maybe why we didn't see those numbers in August that have weakened. The Delta variant had been accelerating maybe throughout the end of the summer into August, causing a delay of the rebound we had all been looking for. Well, now we're into September numbers, folks. What happens if we miss in September, right? What happens if we miss? The expectations build for November. You can only push it back so far, and we're pretty much almost there in terms of when these numbers should begin to pick up. Thankfully, it looks like cases are subsiding. They definitely are in Florida for the new Delta variant in terms of those cases pulling back, allowing, hopefully, more social people feeling more comfortable socially to get out and spend money. But nonetheless, we get that number on Friday. $50 billion. So Cruise, you check this out. Cruise chief executive officer is expected to say the company plans to charge for rides as soon as next year and could expand the business in 2023. This is if they get the green light from the California Public Utility Commission. They're going to take a starring role this week as GM makes its case to investors on August 6th and 7th. Now, the point I was going to make there that I didn't quite get to is that the last little bit, folks, I mean, you know, the autocomplete function on your phone, right? You ever write the right word? You write the correct word when you're texting somebody and your autocorrect just changes it to a wrong word. You say, how does that happen? We're supposed to have, you know, all of this brilliant artificial intelligence, right? We're going to have self-driving cars. We're going to have drones dropping off products. And you can't tell me you can't make an AI program on my iPhone that knows that you just changed my text to a sentence that makes no sense. So I give you that as in there's still that last little bit. And it's, you know, when it comes to autocorrect, texts are great, right? It makes a mistake occasionally. That stuff can't happen with cars. That's the last little hump that's a little difficult for some of these technology companies to get over. But it's the final quarter of 2021. 2022 is going to be here, and 2023, they might be pushing out rides in a big way. GM is going to make their case to investors October 6th and 7th this week in a push into electric vehicles, self-driving software. And you're talking about they see a path for its ride-hailing business to reach $50 billion in revenue as the company ramps up its driverless ride-hailing business. That's a lofty estimation of revenue, folks, when you're going to literally just begin charging for about rides maybe next year. They hope to start charging for rides next year with a modified version of the Chevy Bolt electric car. They're expected to say that if the Public Utility Commission approvals are obtained, the company could start offering shared ride services in 2023 with its Origin autonomous shuttle, which will be built alongside the Hummer EV and electric Chevrolet Silverado pickup in GM's Detroit Hamtramck plant. There's a lot going on there, but you think about it. I mean, you're just going to have electric shuttles driven by robots, picking people up, dropping them off. Car ownership could be something of the past, folks. I mean, yeah, you're going to be able to have cars, but think about the business plan of having cars that just drive themselves. I mean, think about what Uber would make if they just had cars that didn't need a driver. Flip side of that is Uber doesn't even need to buy cars because they have people using their own cars right now. So it kind of changes the whole dynamic shift in that. Tesla probably going to have a fleet of these at some point in the future. Elon's talked about it. They are marching towards that as well. But you see the dollar valuations. $50 billion you're talking about on this, and they got nothing in terms of revenue until potentially next year or even 2023. But once they start getting that revenue, it's probably going to be like flipping on a switch in terms of how you transition to that. Let's jump around too. So there's GM. You're up about $2. Whoops. Ford this morning up a bit. Toyota down actually from 177 to 174. Let's check out some of the travel stocks because, man, they rocketed higher Friday. They're a little bit higher this morning as well. American Airlines up about 20 cents right now. You got Delta Airlines continuing the run higher as well. We jumped to Boeing. Boeing as well higher. You check out even the stocks like Airbnb were skyrocketing higher on Friday. They're down a little bit today. Expedia was higher as well. They're about flat. You see the pop on Expedia on the open. They get back some of those gains. Uber and Lyft benefited on Friday's action as well. They're down a little bit with the market. Uber was up to 47. You're back to 46.40. Lyft shares right now down a bit as well. We'll finish it up with the cruise ships. Cruise is Carnival up about 30 cents right now. Norwegian up as well. And Royal Caribbean continuing a little bit higher by about 10 to 50 cents. Remarkable that all had to do with Merck and the pill they came out. Merck higher again by about $3, $2.50 to the upside. Merck, you take a look at the daily, quite the pop on Friday to 81.40. Now this morning we're going to open at 84. We're right back to the highs on Merck. A lot of excitement in this market. I was surprised about it myself, but it may be a bit of a panacea moment in terms of the market pricing in that we get some antivirals, folks. Cruise ships get antivirals where people get sick. You actually have a pill that you can give somebody orally to help that person to make sure that they don't get severely ill. You get a hold of the severe illness. You get a hold of this whole pandemic. The market took off like it was, a cure for all in terms of social interaction stocks, whether it was travel, airlines, cruise ships. I just went through them all dramatically higher. So the market really pricing in a big effect from that pill. Not sure that's how it's going to play out. Maybe there'll be some more that come down the line as well in terms of types of treatments, oral treatments, ease of treatment in terms of treating that to prevent the severe disease. Nonetheless, remarkable action across the board, and it's continuing today. Now, on the flip side of that, Moderna trading lower. Check this out, right? Moderna on Friday trades from 380 to 340, and just like that, you're down to 311 this morning. You were up to almost 500, so you're back to this little consolidation area here. Now, again, we got about a 312 build right now for Moderna. That's an area that we had some big-time volume going back to July, okay, where this thing really crushed higher. We'll see how this thing trades. You're back into the week of July, that's the day, July 20th. You're back to, and BioNTech, I believe, as well. Is that BioNTech? No. What's their symbol? BNTX, there it is. They're lower as well, same deal. That was Friday's action to 254 this morning. You're at 236 as the vaccine stocks pull back. Merck trades higher. Stay tuned, folks. We'll be right back from the market open.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. We got the S&Ps down about 10 points right now. We got the NASDAQ negative by about 60. The Dow negative by 38. Jumping over to a little movie action. Big weekend for Venom. That's a Sony Venom, Let There Be Carnage. That is the second follow-up to the original. $90 million. Think about it in terms of not a bad domestic haul over the weekend, the best box office haul since the COVID-19 outbreak began. I say think about it as in there's still a lot of people that are not quite comfortable going into an enclosed movie theater. You know, it's one thing if you're out there and you're all vaccinated, and maybe you're in an outdoor space, and everybody's making their own decisions, but you can't argue that some people aren't quite comfortable to be in that degree. So $90 million is a huge weekend. The flip side of that is you have other people really clamoring to get out and do normal stuff again. Understandable as well. Big number. Let Them Be Carnage outpaced the first Venom film, which only took in $80 million when it opened in 2018. Second highest October opening in cinematic history, just behind The Joker, which generated $96.2 million. That is a great movie. Joaquin Phoenix. Check it out if you haven't seen it. But yeah, so they opened. Movies look to be getting back. I mean, these stocks, you might see AMC was a little bit higher this morning, and actually pulling back to be negative on the day after a weekend like that. It is a tough going on AMC. That's probably because they have just an extraordinary valuation in terms of probably where they belong in the long run. You're already trading at $38. Jump over to the Analyze tab. We're talking about a company right now with almost $20 billion valuation. Not sure that's warranted. Nonetheless, that is what the market is saying. And just like this, we're catching a bid, folks, across the board. Let's jump back. We get the Dow now positive. There's a pop for you right on the open. We're talking about jumping almost 100 points to 34,200. We have the S&P is now flat, and we got the Russell negative by 3 points. All right, jumping around to what else we got going on. Let's kick things off. What do we got here? Yeah, Delta's air ticket sales. Speaking of travel, reinstates initial Q3 revenue view. So getting into this, said on Sunday that its ticket sales had stabilized and started to improve, putting it on course to deliver third quarter revenue within its original forecast for 30 to 35% drop versus corresponding 2019 levels. I much prefer 2019 comps right now, right? I talk about it a lot just in your own head. It allows you to equate where we are versus a more normal level of valuation for these companies. Delta, you're only talking about, 2 out of every 3 people are in a seat compared where you were in 2019 with a 30 to 35% drop. I imagine this one is going to pick up as well. It's an improvement, though, from its projections last month when it adjusted the forecast to the lower end because of the COVID-19 resurgence. A little bit of what I talked about here. We're already coming into an area where we get non-farm payrolls on Friday, and we have had, hopefully, a peak in the cases, in the hospitalizations. It's definitely happened in Florida, but Florida was ahead of the curve on our peak. Nonetheless, you're seeing a little bit of a rebound even when it comes to travel. The company said company is also seeing a surge in demand for its transatlantic flights after the White House's decision to reopen the country to fully vaccinated travelers from around the world. That's where airlines caught a little bit of a bid. They accounted for 11 to 17% of 2019 passengers' revenues for the big 3 carriers. And when you get up to vaccination rate, they're up to 84%. And that is being driven by Delta's got $200 monthly health insurance surcharge for those who had not been vaccinated. They expect the rate to be above 90% by November 1st. That's quite a hefty tag in terms of $2,400 a year. Extra surcharge for health insurance for their workers. And getting into what else we got going on. We have some earnings going on this week. Let's see. We talked about Moderna. We talked about GM. Delta as well with their ticket sales. Southwest got a little bit of an upgrade to overweight from equal weight. Kind of probably what's coming in terms of just market sentiment in general with these stocks trading higher recently. With Delta subsiding a bit, we have more types of care in terms of Merck's oral antiviral pill. What else we got down here? Let's see. Amazon released what it is billing as Black Friday worthy deals nearly 8 weeks before the actual Black Friday date. Amazon's also announced a program that will allow Prime members to send gifts using just a mobile phone number. I mean, their PR person, whoever's running, the fact that this even makes it into the list of stocks, right, that they basically have items on sale, kudos to them and how Amazon gets that done, because that's a non-story if I've ever seen one. Worth mentioning, though, because Amazon's got like 4 different stories always on their front page, it seems. Amazon pulling back. We got the tech stocks pulling back a bit. Amazon's down 0.8%. You take a look at Amazon shares, pull it up on a weekly. We've been in a consolidation basically between 2,900 and change, maybe even call it 3,000 and 3,500. You got a little bit above that area, probably unwarranted. When Jazzy took over, you accelerated higher before earnings came out in late July, right in the middle of that consolidation area, 3,000 to 3,500. Let's take a look at FedEx. FedEx shares right now down another 0.2%. You're at 222. You look at the run that we had from last May, folks. This is really almost from the COVID lows. okay? You were trading at a price of 103. You only made it to a low of 88 before the market figured out that everybody was going to ship everything using the carriers in place in terms of FedEx, Amazon, and UPS, U.S. Postal Service as well. Man, you got to pull back to the 618. That's about 186. I'd really be looking. You're almost back to the 50% to the full acceleration. You're now below this area, though. It's a little dicey because you accelerated right in a one-way move from 103 to 305. Yeah, you better believe pullbacks are possible, folks. When you do a triple bagger over the period of about 6 months in FedEx, you're back to 222. You're looking for FedEx. 186 would be great for the 618 there right now. Okay, you pull up FedEx, and you're talking about a company right now with a valuation of $59 billion. I mean, you start getting into the area of $40 to $50 billion valuation for this company in the long term. I see some value there, to put it lightly. I mean, you look at where we are on FedEx. Now, they're facing some woes in a big way when it comes to profit, folks. All right, the last quarter, when this thing really tanked after tanking, $450 million in extra expenses over 90 days. I mean, that would blow people's minds in any other economy, folks, that they said, you know what, things got a little tough. There were higher wages. There were supply constraints. We had to pay more for deliveries. So what we did is, over the last 90 days, we paid $500 million to run our business more than we did in prior years. The market would say, well, that seems like a lot of money, $500 million over 90 days that you had to pay more to run your business. Are you sure you're still going to be able to make money? Yes, I'm sure they are, folks. But you get the point. It's a lot of money that they're going to have to really calibrate on how they're going to make back. Now, here's the thing, though. You start getting into 186, you're back to prices, folks, of almost 2015, okay? You trade down into this area that we were at in terms of peaking out in 2015, and that would be a great area to get $100 from the highs. You think about the value of their service, and yeah, you know, at the beginning you worried that maybe Amazon was just going to deliver all their own products, right? And FedEx wouldn't even need to be used to some degree. They're always going to be around some capacity, but that's the argument. Folks, you're getting back into levels that 2014, we're talking about 8 years ago, you're valuing FedEx at the same exact price point. They're going to get over the cost of these surging prices, even if it means raising the costs in terms of the prices themselves. FedEx, quite a pullback from 319, but you see it. This thing's got volatility in it. We were down to 100 at the low, but yeah, I would be looking. You get back to 186 on that 618, you're correlating to an area we got to bounce back in April of 19, also right near where we were for the better part of the beginning of 2015. Nice area there that you can set up a buy for FedEx. All right, folks, stay tuned. We get the Dow positive by 63. We got S&Ps negative by 6. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the 10-year right now with a lower price and higher yield. I'm bringing that up because we get the tech stocks pulling back right now. You get the NASDAQ down a full percent right now, negative 149 points at 14,416. You have the Dow negative by just 8. You have the S&Ps down 0.3%. Russell kicking it up 1.7% in the positive right now. Jump over to, is that correct? Let me make sure I'm looking at real numbers here. Yes, it is. Russell 2000 up. No, that's not correct. Excuse me. I'm not sure why that's ringing up. Yeah. Let's restate those numbers. You get the Russell right now negative by 0.5%. The Dow barely in the positive. You do have the tech stocks accelerating lower. That's what I was going to jump to. I mean, you jump to any of these companies right now. Amazon down 1.4% right out of the gate. You got Apple shares down 1.3%. Microsoft, MSFT, down 1.5%, and maybe you're touching on a little yield action in terms of your negative 7 ticks. That's correlating to a yield right now, pushing almost 1.5% on the 10-year. Okay, jumping around to what else we got going on. We have some earnings coming up this week. We got Pepsi. They're going to be up tomorrow before the bell. We'll jump over to Pepsi, getting a little bit of a lift today, up about 0.5%. We put Pepsi on the daily. We'll pull back from about 159. We jump over to the Analyze tab. You're talking about a $3.50 move, basically just better than 2% in terms of what you're pricing in for their options. When you look at the week, okay, so if you want to trade just, the October 8th weekly options that are expiring on Friday, you're talking about $4.58. You buy a simple call, you cut that in half. So you're talking about if you buy a call, you pick something directionally, you got to be right to the tune of about $2.25 to make your money back and break even. We also get Levi's out with their numbers on Tuesday. They're up 2% ahead of their numbers. That's a decent action. You talk about some volatility, $25 stock, and you got almost a $2.22 implied volatility move. That is a monthly option, though, folks. Okay, they don't have weeklies in Levi's. So the part of the reason why you're paying so much is because that's actually a weekly option through next week, because they only do monthlies on Levi. We also get Constellation this week. Constellation, they do have weeklies. $214 stock. You're talking about almost a $10 implied move on this week, the front weekly expiration, which expires on Friday. Now, jumping over some of these charts, Constellation here. We're right at this 382. Interesting where we've been chopping around, right? You look where we were when the market takes off. You trade down to 160 in Constellation about a year ago, back beginning of November of 2020. You accelerate to 244. We've been chopping around in this area since the beginning of August, so 2 full months. It's always nice when that area is correlating to a bounce we got back in January and back in March, okay? Now, Constellation's got a lot going on. They have beer, wine, spirits, spritzer in terms of their Corona seltzer brand. The thing about the seltzer brand, folks, you want to see how quickly a company can fall to demise. Check out Sam Adams. Great company, great beer. Their brand, I think it's Truly. Is that their brand? They have a brand of Sam. Maybe I'll pull it up real quick on here. What's their? No, that's going back to 99. Let's see if I can pull up which one is their brand. I'll find it during the next break. But nonetheless, you see the woes. This thing really dropped out of bed back in July, folks, and look how far we've fallen since then. You fell on one earnings call, on earnings announcement, from 960 down to 687, 693, okay? And if you had gotten out then, you would have saved yourself an extra 30% because you've dropped from 700 to 500. Don't be afraid to cut your losses sometimes, folks. There's your 3-year weekly. Seems all but natural. This thing's heading back to about $400 where it chopped around for a while for Sam Adams. Much more reliant on their seltzer explosion as this thing took off, thinking that the hard seltzer was going to take over the world. Not so much the case. You look at Constellation, they have Modelo, they have Corona beer. As the world open backs up, maybe that's being drank more at bars. There's so much going on in some of these companies, right? It's like, okay, so bars open back up, beer's going to get drank more at bars, but what happens to the consumer side and the retail side of purchasing products that you hold at home? Maybe that dries up, maybe that hits the market. Nonetheless, you got to like where you are in terms of right at the 382, as I talked about on Constellation, right at the area. We got a couple bounces earlier in the year as well, and about $30 off the highs already. Strong company there, and they have a lot of exposure to Canopy Growth. Now, that has not been a great thing recently, as these companies have continued to fall. Look at today, Canopy down another 2.8%. I mean, are we? Yeah, we're now below where we were trading at in September of last year. I mean, COVID lows are only $9, folks, on this thing. You back it up as far as it goes. Let's put it back on a monthly max. And yeah, I mean, you're back to 2017 prices when you first started accelerating higher, and you're actually back to 2016 prices, which is crazy when you think about 5 years later that you're at the same exact price. A couple times the markets thought that the run was going to happen, and not much the case. We get Tilray numbers, I believe, on Friday as well. TLRY. That thing really got ahead of itself, up to 300. You're trading at $10. We'll put that back on the daily. We'll jump over to the Analyze tab. We'll pull up the earnings. There it is, October 7th, Friday. And you got some volatility priced in for this because, man, these stocks have been volatile anyway. More than a 10% move. Checking out the simulated trades, yeah, we're talking about a $10.84 stock. And if you want both sides of action, implied volatility, you're talking about $1.37. So what's that, 10, 11, 12% of movement. We had a question about NVIDIA in the den. Taking a look at NVIDIA shares, that's a daily. NVIDIA down about 3.7% right now. Hadn't seen anything in terms of news driving that action. We're seeing a big pullback in tech stocks right now, though. We have a rising yield in the tech stocks. I mean, look at this drop. We get the NASDAQ 100. I would say just some of these tech stocks really pulling back. Anytime you get a company like Amazon now down 1.8%, right? Microsoft shares down 1.6%. Apple shares down 1.5%. Google shares down 1.8%. Google below the channel line of where it's been for a while. We'll see if we can get back to that level, but quite a little decisive break for the first time in Google. You're down about $250 from its all-time highs of $29.36. And let's jump back to what else I have going on in terms of articles I got pulled up here to take a look at. Facebook. Yes, thank you. If you didn't get a chance to watch the 60 Minutes from last night, folks, I encourage you to do so. Google it. I'm pretty sure you can find free episodes on their website. You may just have to watch an ad in the beginning. Do what you can to watch this interview. Facebook, we do have a presence on Facebook. They are doing bad things, folks, and it seems like it's all out in the obvious now. And the worry is that everybody seems to know it and nothing's being done. The whistleblower last night, great story on 60 Minutes. This is the whistleblower that was part of the Wall Street Journal article that they put out. She reveals herself last night. She had worked for Civic, as a product manager for Civic Misinformation. And she had a lot of not good things to say about Facebook and just their awareness of what they are doing to people in terms of prioritizing their own profits over public safety. There's too much stuff to go into right now, folks. You got to check it out. But she's got a bunch of documents, and it's all about internal discussions where they are well aware of the harm they're doing to people and societies overall, whether it's young girls on Instagram, whether it's people overseas, whatever it is. Not good on Facebook. So be aware of that one in a big way. We'll talk a little bit more about this when we get back. We'll take a look at the charts. I'll pull up a Fibonacci on Facebook. We'll be right back, folks. Stay tuned.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. I got a chart of Facebook up here. We're trading at 331, down from a high of about 384 just as recently as September 10th. It's only October 4th. You give back $50 just like that. I would say this thing's probably trading down to about 305 to 300. You put it on a little bit longer term time frame. You put it on a weekly. You're talking about highs in 2020 of about 300. And man, this thing really probably just finished an A to B, C to D. You had an A point at the COVID lows of 137. We'll call it about 150 for simple math there. You had a high in terms of your B point at 300. You consolidate. Your C point would be at about 250. You have 150 point A to B, C to D. That brings us up to basically almost 400. We come close to that level. So you pull back to the 304 area. You're talking about a 618 of where we've been. You're talking about to the highs we had back in August. And I see some pain for Facebook. They've been able to overcome this in the short term, but people should be up in arms, folks. Anytime you're talking about just destroying teenage girls in terms of their just self-image across the board, and that's just the beginning of what they're doing in terms of just manipulating people on that platform, folks. If you live on Facebook, turn off the phone, get some air. It just fosters kind of unhappiness, in my opinion. That's I tell people it all the time. You know, it's just not a good place. There's a great interview I heard about a week back on Bill Maher. He was interviewing somebody to kick off his show. And they were saying that one of the things that Facebook's done is the reason why people can be so hateful and harsh with their comments is that in our human existence, usually you have that person in front of you, and you don't want to be that harsh because we're caring people. And you see the person in front of you, and maybe they're your friend from high school, or they're your aunt or uncle, and you might disagree with their politics and everything else going on. But if you have a conversation and they're in front of you, you have empathy for that person, which allows you to have a conversation where you actually care about the person. On Facebook, you have nobody in front of you to give you a feedback of the way your words are making them feel. So as a result, you can be as harsh as you want to, and it just feeds on each other. So hopefully Facebook has some problems. I do enjoy Instagram for pictures occasionally, but I look for Facebook pulling back to about 304 here, at least on that 618. All right, folks, stay tuned. We got a time change. We got Basil Chapman next, and then we got Larry Pesavento live at 11 today. Fast Market at 12 today with Kevin Hincks hosting. Check out those two as they swap it up. And then we got Steve Rhodes, Dave White, Tom O'Brien this afternoon. Have a great Monday.